I got this question asked a lot all the time that, Omar, shall we buy or sell when the EMA cross? Well, the answer is yes, you can. And it is a very effective strategy if you have your rules there. And most importantly, it is not just only you enter when the EMA cross. It is to set up the right amount of stops and target, because I've seen so many times, even I'm going to show you the examples that happened just recently last week. I've taken some trade when the EMA cross. I've sent those trade in the priority group as well. Two of them, I'm going to show you the live example we took last week. I'm going to show you how effective is that. But only problem is if you don't set up your stops and target with the exact amount, what happens is the price goes to your take profit and then shoots back up, and there where you lose money and get frustrated, and you do this again and again until you lose your full account. So in today's video, I'm going to give you the full rule, the strategy I've been trading from last couple of years. I'm going to show you how you can enter and the exact amount of stops and target. Now, it is not a magic strategy, but all you need to do, backtest it, pull out the best performing pairs, and then add those pairs in your portfolio. So without wasting any time, let's quickly jump onto the charts and then start trading once you backtested. Right, so here we are. Now, if you know me, if you follow me, then you know that we must have rules in order to trade any strategy. So rule number one, the price must be above 50 EMA. Rule number two, the EMA must cross 50 EMA. So in this strategy, I'm using 20 and 50 EMA. So 20 EMA must cross the 50 EMA from below. That means the 20 EMA must be below 50 EMA, and then when we have a cross, then we start to look for our entries. Now the rule number three, the price must form some sort of signal in order to enter the trade. So if you are taking a bullish trade, we need to see some sort of bullish signal, and that will be our bullish engulfers and the 382 candles. In the strategy, we're just going to look for bullish engulfer. So now what do we have? We are getting a nice cross very shortly, which I'm going to show you in a very small while. So let's play the market and let's see when we have a cross, and then we're going to enter our trade. Now our rules are met. Price is above 50 EMA. That is good. 20 EMA must cross 50 EMA, which is going to happen very shortly. Let's play the market and let's see. Right here we have a cross. Now what I used to do whenever I see a cross, I just enter my trade right there and then, and hope the price will push up and get excited that I'm going to make a lot of money. So what do we have once we have a cross? You remember our rule. We need to see some sort of bullish signal, and if you know the indicators are lagging indicators, sometimes we get a signal like bullish engulfer after one or two candles. So as long as we have a cross, all we need to see, look for a signal, which can be a very next candle, which can be second or third candle. Now let's play the market and see what happens. We have a bullish candle right here. So let's place a trade here. Now we are ready to enter our trade. We have an engulfing candle. We have a cross, and everything is going with our rules, and let's take this trade and make lots of money here. Let's play the market and see how it goes. Oh no, that's supposed to hit my take profit. Because we have a cross, we have all the rules are met, we had an entry candle, and what happens? The price push back down. So that is a mistake I don't want you guys to do, and I want to give you some exact rules so that you won't make this mistake. I'm going to give you how to set your stops and target and what candlesticks we need to look at. Now let me show you another trade which we took this week in the priority group as well. Now, if you remember the rules, what do we have? We have a price above 50 EMA. That is our rule met. Now, we need to see 20 EMA cross 50 EMA, and that is not met yet. And let's play the market and let's see if that happens or not. Now, as you can see, it is still not crossed yet, but we are still looking for conditions. Like I said, the indicators are lagging. Sometimes we get a candle after a cross. Sometimes it's a very next candle. Sometimes it's second or third candle. Now, let's see what happened in this case. Right here, what do we have? We have the cross. We have rule number one met, which is the price is above 50 EMA. We have a rule number two met, which is 20 EMA crosses 50 EMA from below. We have rule number three, which is we have a bullish engulfing. That can be a 382 candle as well, but for now we are just looking bullish engulf. Now, the way you enter the trade, it's not just a random targets. Once you have a close of this candle, you place a target at the close, and then you keep your stop loss below the EMS, below the wick, or if you see this wick here, the candle before that, or if we have this candle has the longest wick, then we use this candle. Now, what we're going to do, we're going to use ATR, which is right up there. If you hover over this candle, ATR is 34, just go 34 pips from the wick of this candle that happened above the cross. So 34 pips below that. So you just bring your tool to the wick of this candle, which is 42, add 42 with 34. And that comes up as 76 pips. So let's move your 76 pips target below and 76 targets above. Right, so now we have our stops and targets set, and let's see what happens. Let's play the market. Yes, we had a push down. Again, push down consolidation. Yes, that is what I want to show you, that if let's say you have a stop loss somewhere here and you want to keep a very tight stop loss, which I don't recommend, because always use ATR when you're using your stop loss. If you remember, we use this candle and we push our stop loss below this candle, 1 ATR below this candle. That is the reason that, as you can see, the price did come back down equal to this wick from where we pushed our stop loss below. So let's keep our original stop loss, stops and targets. So that's the reason I want to show you, and let's see how it goes. After a while, yeah, our target has been hit easily. So that is how we set the stops and target with the exact rules. If you know all the rules, only then you can able to make it in the trading. In trading, if you have no rules, then trust me guys, you are just gambling. And gambling is something you don't want to do. Have your rules there, have your set and store rules there, have objective rules there, keep it in front of your desk, and once your rules are met, you are good to go for your trades. And trust me guys, this week we had so many winning trades, so many trades. I sent in the group as well, and I took myself personally, which I'm going to show in the weekends video of the net gas video. So make sure you check that out as well, because you're going to get lots of knowledge there as well. So let me show you one more example, and then I'm going to show you one bearish trade and rules for that as well. Right here. So now if you remember our rules, the price must be above 50 EMA. Yes, the price is above 50 EMA. This red line is by 50 EMA. Rule number 2, the EMA must cross the 50 EMA from below. And as you can see, 20 EMA cross 50 EMA from below right here. It's still not crossed yet, but let's play the market and let's see if we have our rule number 1 or rule number 2 met or not. Right here, we have a cross. Now, if you remember the rule number 3, we are not entering the trade right here. If you remember, I'll show you the first example, how the price pushed down without a confirmation. That is why it is very important to look for the conditions and candlestick patterns talks with us. If it shows us if we have a bullish or bearish pressure, and that is what we call the candlestick patterns. And now let's see what happens if we have a next candle as an engulfing candle or a 382 candle or not. A very good example of a lagging indicator. As you can see, this candle made a cross in the EMAs, but we are still waiting for a bullish pressure. As long as price is above 50 EMA and a candlestick pattern within 1 or 2 candles, next 1 or 2 candles, we are good to go for the trades. Now let's play the market and let's see. We still do not have a condition. So we have one more candle to look at. If we have that candle, we are going to enter. If not, we're going to leave this right here. So let's see right here. So as you can see, the price did push down, and imagine if you entered right at the cross, how much stress you would have gone through just because you were not patient. So at this point, all the 3 rules are met. Price is above 50 EMA, 20 EMA crosses 50 EMA from below, and then we had rule number 3, we have a bullish pressure, which is bullish engulfing candle that happened above 50 EMA, closed above 50 EMA as well, which is very important. It must close above 50 EMA. Now, if you remember the targets right here. Now, all we need to do, always go below the wick, whichever is longer. If this wick was longer, we would go below this wick. In this case, our entry candle wick is longer. You can also keep it below somewhere or just use ATR below this wick. ATR is at 38, so till this wick we have 33 pips. We're going to add 38 with that, and that comes up with 71 pips and 71 pips right here. Like I said, if you are not comfortable with larger stop loss, you can still keep it few pips, 10 pips below or 15 pips below the wick. So let's keep the original targets first and let's see how it goes. With the very next candle, as you can see, the price hit the take profit. We have a bullish candle that shows the bullish pressure. We had a cross and all the rules are met. We have an objective rules and that hit our take profit. So let's do the bearish example. And now for the bearish trade, everything is going to be same but flip upside down. So what we're going to do, we're going to look everything exactly the same. The price must be below 50 EMA. And right here we have the rule met, 50 EMA, the price is trading below that. Now the rule number 2, 20 EMA must cross 50 EMA from above. So if you remember, for bullish trade, it is from below. For bearish trade, it is from above. So once the 20 EMA crosses 50 EMA from above, we have the rule number 2 met. And let's see if our rule number 2 is met or not. Right here, our rule is still not met. Now what do we have? Right at the 20 EMA cross, we have a bearish engulfing candle. So rule number 3 is met. Number 1, price is below 50 EMA. Number 2, 20 EMA cross 50 EMA. Number 3, we must see a bearish pressure, which is our bearish engulfing candle. So if you remember how to set up stops and targets, exactly like bullish trades, at the close of this candle, we're going to go 1 ATR from the wick, which is 10. We're going to add 24. As you can see above, the ATR is 24. So add 24 with 10, which is 34 pips above, 34 pips below. So that is how we set the stops and target. Let's see how this trade played out. Right, a nice take profit has been hit with all the rules are met, and these trades I've shown you just happened within this month and how powerful this strategy is if you follow the rules. Right here, recently we had a bullish trade as well. Right at the cross, we had a bullish engulfer, and as you can see, that is easily your take profit hit as well. So that is how you enter your trade with objective rules. Right, traders, so as you can see how nicely this strategy played out if you follow all your rules. And I've been using this strategy from a couple of years and it has given me some insane amount of results. And if you want to use this strategy, make sure you backtest it, optimize your best performing pair, and then start trading this strategy. Gain some confidence with backtesting, gain some confidence with demo trading, only then use your live money in the financial market. Now, before I end this video, I just want to mention that trading without knowledge is very risky. I'm shocked to see that traders are losing thousands of pounds, thousands of dollars, and they're not ready to take a right education. I do run a Forex trading course, and all the strategy you will learn there has been tested. You'll get the best performing pairs as well. You will learn all the risk management. You will learn how to manage your trades. You will learn how to trade different strategies when the markets are trending, when the markets are not trending, they are consolidating. When the markets are in the area of value, you will learn how to mark this major structure, support and resistance with the exact rules. These are the major zones, the order block zones where the big institution, they have the order set, and these are the areas we need to identify as accurate as possible. And if you follow me on YouTube from couple of months, couple of years, you have seen how nicely the zones reacted in my videos. I've shown that in my, if you are my priority members, you have already received the reports every single week and you have seen the results already. So make sure you educate yourself before you start trading with your live money. And this course is for someone who is brand new in trading. You will learn every basics, the advanced level. If you have a good trading knowledge, it is still beneficial for you. You will definitely going to learn something out of it. And if not, that's totally cool. Make sure you hit a like button, hit a subscribe button so that you receive this type of content every single day. And the second thing I want to mention here is if you're trading, make sure you do a right choice of broker. You need to make sure that these brokers are regulated. I have my favorite brokers in the description. I trade with IC Markets and recently started trading with INFX. They are much more better. The swap rates are really good. If you are a scalper, then they have a raw spread account where you have a very tight spread. If you want to trade commission free, they have a different account for that as well. Overall, they are really good. If you want to see their ratings, you can check that on the WikiFX. The links are in the description. If you join them through my link, then I will add you in the priority group for free, where you will get tons of knowledge as well. So links are in the description. I really hope that you got some benefit out of this video, and I really hope that you got a value out of my content, which I upload every single day so that we can all trade together and trade efficiently. If you're getting value, please do not forget to hit a like button for me. It really helps me in the YouTube algorithm. And if you're new, as always, join Money Markets by hitting a subscribe button so that we can all trade together and trade efficiently. Hope you trade green and have an awesome weekend. I'll see you guys in the next video. Take care.